Hi there, welcome to Nepi Invest and welcome to August the 26th, 2024. It is the last week of winter, although it doesn't really feel like it in Brisbane right now. It's also the last week of reporting month. Yes, this is the week where many companies have to release their full year or half year results. They have no choice because if they don't release it when they are required to by the ASX, they will be suspended from trading. Now, not all companies have to release their results this time of year. Some companies release their results in May, November, that sort of period. Those are usually New Zealand-based companies, but even non-New Zealand-based companies, some of those companies release their results outside of the normal cycle you usually see for ASX companies. Anyway, a pretty good day on the markets today. In fact, everything is up. I'm assuming uranium has had a really good day because of what happened with that big mine, uranium mine, the biggest, I think, uranium mine. They had lower than expected production or something like that. So I'm expecting to see quite a few uranium companies in the best performing companies today. But overall, a pretty good day on the markets. And this is to be expected, or was to be expected, because of the pretty good day we had on the American markets last Friday. Okay, so the agenda for today's video goes through the best and worst performing sectors, indices, also companies, and also have a look at those companies that released results today. Not all of them, because that will take me probably 5 hours. Well, I'm exaggerating just a little bit. But I do have a list of about 7, 10, 12 companies I do want to mention. Not all those companies actually did release their results. One company released their indicative results and also a trading update, and that company share price is down a fair bit. And possibly some of the companies I have not included will make it onto the list. And I can think of just one that has not made it onto my list that I probably should talk about. In fact, two companies I probably should talk about, but hopefully those two companies are in the best performing companies of the day. They did not release results, but I still should talk about those two companies. Okay, no tweets or anything like that. I might go through a few of the comments. A really interesting comment at the top of the list to do with running, saying that running causes an early death, which is weird. Okay, very weird. And it's not, the science doesn't back that up, by the way. In fact, it's complete opposite. If you actually do more exercise and running, it actually decreases your chances of early deaths, which makes sense. You're more likely to be fit because early deaths are caused by heart disease, that sort of thing. Anyway, I'll get into that. In fact, I'll do a little bit of research when I talk about that particular question, even though it's not investing. Okay, so let's have a look at the ASX today. Okay. Uh, Indices, most up, I'm assuming, except one. Staples is down. Healthcare is down also. I'm surprised Staples, I don't know what's happening there. I can think of one staple company that released results today. That's Endeavour. Try to think of something else, and that did not made in my top echelon of companies I want to talk about. But maybe if the share price is down a fair bit, I will have to discuss that company. In fact, it's down by 1%. So something is driving consumer staples down today. Let's have a look at these companies by market cap. So Woolworths is down, Coles is down, Treasury Wine is down. There's Endeavour Group, down 6.51%. Now, the market cap of Endeavour Group is 9.3 billion. So it's not quite as big as Woolworths and Coles, but still, I think that is dragging down consumer staples today. And Woolworths, Coles, and Treasury Wine have not helped. A2 Milk is up, Metcash is up. So really, I think it's been driven down by Endeavour Group. So I probably should have to, or should talk about Endeavour Group. Maybe very briefly. I should also mention I have not had a close look at any results today. Yes, I did not have a close look. I just wrote them down. I did other stuff. Why look at the results when who knows how the market is going to react? Because you really have to know what the expectations were, and also you have to look at the outlook and any sort of expectations the market has in regards to the outlook. And Kelsian is probably a pretty good example of that. Kelsian Group, share price of that company is down. Last time I looked about 23%. So I should talk about that company later in the video. Okay, so let's move on. Don't want to ramble on too much. But yeah, discretionary financials, telecommunications, all up by over 1%. ASX 20, up 0.8%. I'm assuming mining companies are having a good day. So BHP, Rio Tinto, Fortescue, maybe Woodside, Santos have had good days. I don't think there's any uranium companies in the ASX 20. No, pretty sure there's not. And we already know Woolworths is down, Coles is down. So I'd probably assume maybe 5 companies down at 15 up. Let's have a look. Oh, 12 up, 8 down, which is interesting when the ASX 20 is up 0.8%. Okay, so let's have a look at the best performing companies and the worst performing companies in the ASX 20. So we have National Australia Bank, REA Group, Aristocrat, Westpac, Woodside, Commonwealth Bank. Yeah, financials had a good day. Totally forgot about those companies. Fortescue, ANZ, Wesfarmers, all up by over 1% today. So some of those are the biggest companies within the ASX 20. So now we know or can understand why it's up 0.8% or 0.8%. However, only 12 companies are up, 8 are down. It's being led, ASX 20, by the bigger companies in the industry. On the flip side, the worst performing companies, WiseTech, Brambles, both those companies released good results last week, good market reactions, and now we probably are seeing a little bit of profit taking. And there's Woolworths, Rio Tinto, Telstra, CSL Coles, Transurban, all down. In fact, is that 8? Yeah, that is 8. Okay, let's have a look at the best and worst performing companies on the ASX. I do expect one company in particular to be at the top of this list. So let's have a look to see if it is. And there it is, Helena Power. Oh, and there's Acton and Gen, up 108%. Those are the 2 companies I thought I would have to discuss because they released their they released some announcements today, and the market liked it. In fact, Cleaner Power now is up above 1 cent. In fact, I could buy Cleaner Power now. And Acton and Medical, if you remember last week or the week before, share price of that company fell a fair bit, and they released some positive news today. So let's have a look at both of these companies. Helena Power. Now, I took notice to this particular result or this particular announcement. For some reason, I just want to say results, and that's just the time of year we're in right now. I had a look at this particular announcement from Cleaner Power, and I went, oh, interesting, just because of 2 words in it. Helena executes MOU with US data center developer. And I knew straight away that the market would like that. And it opened at 8 cents, or not 8 cents, 0.8 cents. And it's in trading halt right now, 1.1 cent. I'm not sure why, because they've released news today. So that's explaining why the share price has risen. Maybe they need to provide more information in regards to this MOU. I am not the biggest fans of Memorandum of Understanding, which this is, because I doubt there's any numbers in this. I did actually open up and very quickly read, but yeah, there's usually no numbers. It's just a Memorandum of Understanding to develop AI-focused data centers with natural gas-fired power plants incorporating carbon capture and sequestration. And who knows how this is going to benefit Helena Power in the future. I just don't know. It could be really beneficial. I just don't know. It's one of the reasons why I don't like MOUs is simply because I just don't get a clear picture in regards to how it's really going to benefit the company, because I have seen many MOUs do absolutely nothing for the company. And that's over 15 years. So actually, I'm not the biggest fan of MOUs. Well, when I say not the biggest fan, I mean it doesn't really trigger. It's not a catalyst for me to take a position in the company, even if the share price rallies 120%. I'm pretty sure someone actually mentioned Cleaner Power in one of my comments before. So let's have a little chart for Cleaner Power. Time to get excited. Yeah, maybe this could be a bit of a breakout for Cleaner Power. I would buy that. Share price at 1.1 cents. It fell below 1 cent back in, looks like June of last year, so 1 year ago. Fell below 1 cent. Now it's back over 1 cent. So we're talking about a 1-year high. Yeah, so possibly this is the turnaround for Cleaner Power. But I would like more solid numbers, some financial numbers to get me more excited. Same can be true for Acton and Gen. Now, the share price of this company dropped heaps the other day. So let's have a look. It dropped 59% on the 12th of August. The previous trading day, the share price closed at 7.6 cents. So the share price has still not got back up to those levels. even though the share price has risen 104.17% so far today. So it's only up to 4.9 cents. But the share price did get to a low of 2.1 cents on last Friday's trading session. Fair few shares traded on that session as well, 32 million. So what's happened today with Actinogen? So Actinogen updated depression trial results and implications. I had a quick read of this, and again, okay, maybe it's soothed some fears out there in regards to that announcement the other week. I don't know. But anyway, the whole problem with the previous announcement was the placebo did really well as well. Not only did their drug did well, the placebo did well. So what you want to see is the drug do well and the placebo does nothing at all. But that was the problem Actinogen faced with this particular trial for Zanacid. So yeah, and they have that P number in it. Now I have heard someone say companies need to provide that P number, whatever it is. I have no idea. I'm not an expert in these sort of announcements, but yeah, they need to provide that P number. And that, in fact, that was an explanation to why another company's share price did not rally when they released some positive results. In fact, I believe the share price fell, and the reasoning behind that was they did not provide any P numbers or something. Anyway, so again, over my head, I'm not an expert in this field, but the market likes it. So let's have a look at the chart for Actinogen. I get those little pop-ups because I have TradingView opened up on a few of my machines, including twice in this machine right here that I'm recording this video from. So it doesn't like that for some reason, even if it's on the same machine. Anyway, so let's have a look at Actinogen's chart. Yeah, this is too volatile for me. Up, down, up. Nice looking chart today. Share price actually opened at 3 cents, is now at 5 cents. So if you bought on open, you've done well today. Really big volume as well. Massive volume coming through today. So even bigger volume than the other week. Let's have a look at the 1 minute charts. I'd say this could be a bit of a play thing for day traders, maybe. Getting on open, and there's nice, really nice rise from just after open all the way through to the highs. About 1 hour, the share price went from 3 cents to a high of 5.4 cents, and since then, share price really going sideways. Okay, so that's Actinogen, two companies that have done really well today, up over 100%. Fertos, I'm pretty sure that's fertilizer, phosphorus or something like that, up 52% on fairly low volume. Premium. Okay, I actually did not or was not going to talk about Premium. Share price of that company is up 22.89%. That chart is going to be looking fairly interesting because it's just all over the place. In fact, I'm pretty sure Premium released some negative news not long ago. So again, I'm not sure what's happening there. Share price up 23% on the back of their results. And it wasn't that long ago. Yeah, June 2024 update. I'm pretty sure the share price fell on that. And let's have a look at Premium. So again, I have not looked at the results of this. Actually, I did have a quick look. I'll show you what I did see. What am I? Oh, the chart. I'll just show you what I did see when I open up this particular report. The only thing I looked at. So here we go. So what I'm looking for here is a breakout. And the share price, when they released that update on the 17th of July, actually fell almost 10%. So all over the place. A little bit of fickleness here. And the share price back up to 51 cents. So this could be a breakout. But the share price was at these levels before that announcement of 17th of July. But I will follow this company a little bit more closely because of their results today. And I'll just show you what I looked at. I'm trying to remember which announcement I did open. I'm going to see if it's the media release. Yeah, it was this one. What they did, very smart, what they did is they compared the financial year 24 numbers to the financial year 23 numbers. But the other thing they did that was really important was they broke down the financial year 24 numbers into the half year. And the reason that's very important is because they saw pretty good growth in the second half versus the first half. But if you compare financial year 24 to financial year 23, most of those numbers, the metrics, financial metrics, were actually down. For instance, statutory NPAT was down 42% for the year. But if you look at the second half compared to the first half, it was actually up 19%. So I think they did a really good job showing exactly how the company has performed in the second half compared to the first half. So things are now moving in the right direction for the company, and that's why the share price is higher. So that's the only thing I took away from Premium. So not surprised to see the share price higher today. Not surprised. Share price opened at 45 cents and went to a low of 43 cents. So a lot of strength today. In fact, you probably can see that in the candlestick. Yeah, it's a very good looking candlestick. That solid green candlesticks are very good. That's what you want to see. So good day for Premium. And we are seeing some uranium companies, Infinity Resources, which I do own. Not sure about Augustus Minerals, but definitely Deep Yellow, Elevate Uranium, Lotus Resources, Kogan's in this list, up 13.83%. Did I put that down? Yes, I did put that down. So we'll have a close look at Kogan later in the video. And let's have a look by market cap. Chorus. Did I put Chorus down? Yes, I did. Paladin Energy, Uranium, Clarity Pharmaceuticals. Not sure what's happening there. Or with Johns Lyng Group. I don't believe either of those companies released anything. I'm surprised Johns Lyng Group is up. I'm sure they are releasing the results tomorrow. So maybe the market is getting a little bit excited ahead of time. So this is Clarity Pharmaceuticals. They did release, oh no, just changes to board of directors and management team. Possibly the market is like that. I don't know. And let's have a look at Johns Lyng Group just to see. No, they have not released results. And I'm pretty sure they're releasing results tomorrow. I'm a shareholder. And I'm pretty sure I wrote down tomorrow. Yeah, August the 27th. So there is potential. Maybe some loose lips are out there. There's Boss Energy. I thought Boss Energy might be up by about 10%, but only up 8.4%. And not quite as good as Deep Yellow. Silex Systems, which is not a uranium company, like a miner. I'm pretty sure they have technology that would be beneficial for uranium companies. Aussie Broadband. Good day for Aussie Broadband. I believe it's their first dividend. They've announced their first dividend. And for some reason, the market loves that. Tyro Payments had a good results today, up 12.25%. I am going to talk about those two companies very briefly. A company called Tasme, listed on the ASX not long ago, released their results. I had a look at those results, and I was impressed. Peninsula Energy up 10.5%, another uranium company. Let's go a bit deeper. Let's see what else is here. Okay, Biome released results. Adore Beauty released results. Yeah, quite a few companies released results, have had good days today. Okay, so let's have a look at the worst performing companies. And we are going to see a few companies in this list as well. And this is the problem when this is the problem this time of year. You hope that the companies you own release good results. Because if they don't, the share price could drop 22%. And they're actually 24.55% as Calcium Group. Although they didn't release their results, they released indicator results in a trading update. I'll talk about that company. Did I put it down? Yes, I did. Also put down Close the Loop, down 23.8%. Not sure what's happening there. I did have a look at those results, and I was a little bit surprised to see the share price down a fair bit. So I'm not sure what's happening there with Close the Loop. And NIB Holdings down at 16.6%. That's interesting. So we'll have a look at that company as well, fairly briefly, focusing mostly on the chart. And yeah, so let's have a look by market cap. Endeavour Group. There's Endeavour Group. Satire down a fair bit. Appen probably profit taking. PlaySide Studios released their results yesterday, so some more bad news for that company. Smart Parking released their results. Share price has been up and down a fair bit. I was not going to talk about that company. Did I write down? Yes, I did. So when I say talk, I mean I will look at the chart and maybe I will discuss briefly their results. Integrated Research, not sure what's happening with that company. In fact, the more the share price falls of that company, the more interested I get to actually adding to my trading position, because it's getting to the point where I think it's looking really good value, possibly. Okay, and that's about it, I think. Yeah. Okay, so let's have a look at some companies that released their results today and have seen the share price either go up a fair bit or down a fair bit. Also look at a few companies that maybe whose share price did not do much today, but I still want to talk about those companies. So let's start off with Aussie Broadband. I'll go down by my list here. I've written down in no particular order. So we'll start off with Aussie Broadband. Share price up 12.2%. And I'm pretty sure, yeah, dividend distribution. I'm pretty sure this was their first dividend. You can actually see that just by going to CommSec, and they should have a dividend page. And according to this is their first dividend. There is potential that that's the reason why the market likes this particular announcement. Just the dividends. Again, Australians are obsessed with dividends. Absolutely obsessed with dividends. And there we go. Aussie Broadband Board announces an inaugural fully franked dividend of 4 cents per ordinary share. And what you will see is a lot of Australian investors, because of that, will now think of Aussie Broadband as a quality company. That is all it can take. And I actually have heard some people say that. One person where I work actually says that. Well, the way I consider quality companies versus non-quality companies, if they have a dividend, they're quality companies. If they don't, they're non-quality companies. It's a very raw way to look at it, but it's not absolute truth. Again, Warren Buffett's company, Berkshire Hathaway, has never issued a dividend, and I would probably say that's a high-quality company. Yeah. Anyway, so dividends are not the be all end all of companies. In fact, I would prefer most of my companies not to issue a dividend if they think they can grow the company, because dividends can suppress growth of companies. Not absolutely, but it can suppress the growth of companies. It's all about capital allocation. What is a company going to do with their cash flow coming in the front door? What are you going to do? And if you give dividends back to the shareholders, there's less room for future growth. So I do like, I don't mind a token dividend, but I don't like a massive dividend. Except for step one. Step one is a little bit of a different case, though. Otherwise, these numbers are okay. Do they have a little table here? Yeah. There's no complaints about these numbers. Revenue up 27%, gross profit up 29%, underlying EBITDA 34.5%, profit up 21.7%, normalized operating cash flows up 54.1%. Now, even though I said there's nothing to complain about these results, it's not the results or the changes in all these metrics. It's actually the expectations. How do these results compare to expectations? So more than likely, these results were at least at market expectations. And the other important thing is to look at any outlooks. So here's a financial year 25 focus and also a trading update. And I have not had a look at this, so let's have a look at this together. The group has had a strong start to the year. That's pretty promising, with net broadband connection growth of 13,000 in the quarter to date, which is positive considering the price rise that occurred from a July. And Buddy Telco, remember the share price dropped not long ago because of Buddy Telco. People thought it was a profit downgrade, but it was not. It was not. If they didn't start this Buddy Telco, it would not have been a profit downgrade. So if this Buddy Telco is doing well, and they've mentioned it's a pleasing first 6 weeks of operation with 2,192 services connected, maybe it's going to be a success, and this will be very beneficial for Aussie Broadband in the future. Now, when a share price did drop recently, I went, oh, I've got to buy some more shares in this company. I think this is the market completely overreacting. Where is Aussie Broadband here? That's silly. Do I have to actually type out the Aussie Broadband? There it is. Yeah, there it is. The share price. That's the. Was it here? 15th of July. Feels like it was longer than that. Yeah. So on the 15th of July, share price dropped 14%. Share price dropped below $3 for a brief period, and that's when I bought some shares. Share price now at $3.50, which means my trading position in this company, that particular trade, is up, what's that? 20%, almost 20%. So the main thing I'm looking for here is any breakouts. Would I define this as a breakout for Aussie Broadband? And unfortunately, the answer is no. Even though results were good, nice market reaction, share price was at these levels not that long ago. So we're talking about less than 2 months ago. So it's not at least a 3-month high. Preferably, I'm looking for a 6-month high. So I wouldn't be surprised to see a little bit of resistance here. And we've already seen a little bit of resistance today because the share price has fallen just a touch. When I say just a touch, the high today is $3.59. So that's not a surprise to see the share price struggling at these levels. What I'd like to see is higher volume. That's probably the one negative thing. Well, there's more negative things. It's not a 3-month high, or at least a 3-month high. I probably would have liked to see higher volume. You can see the big volume on that 15th of July day, that really big volume in March. What happened then? They lost that Origin contract or something. And when they released their results in last February, share price actually rallied 18.6%. Didn't last long, did it? In fact, this was a breakout. So you can just see that sometimes breakouts don't work. So Aussie Broadband had a breakout, and then they had some bad news not long after that. So not all breakouts actually do work. I probably talked a little bit longer than I was going to for Aussie Broadband. So let's go through these a little bit quicker. Chorus Limited, a New Zealand-based company. When this company released their results, I had a look at how the company was performing on the New Zealand Stock Exchange. It was up by 2%. I went, oh, okay. And then I saw the share price of Chorus on the ASX up by 10%. I went, ooh, is that possible arbitrage? I don't know. I think this has telecommunications in New Zealand. Yep, operates as a telecommunications infrastructure company. So what we're looking for here, and again, this is a company I did not have a look at the results. So quite a few of these companies, I did not have a look at the results. So what I'm looking at is just whether the company is showing signs of a breakout. And then I will become a little bit more interested in the company. Is this a breakout? And the answer is yes. Well, no. It's close. The reason I'm saying no, share price is at almost a 1-year high. Yeah, it's about a 1-year high. My only problem, and it's on financial results, which is good. So we have 2 ticks there. My only problem is the volume has been meh. In fact, they had higher volume 2 days ago. So I'd love to see higher volume. That would be more powerful. And we have seen a little bit of selling today, which is interesting. So it could be these buyers or shareholders who bought back in 2023 at these higher levels, they are getting out now. So they're putting a little bit of pressure on the share price. So Chorus is, this is close to a breakout. You probably could find better ones on the ASX right now, but it's close. Now, what we know is NIB Holdings is not a breakout because the share price of this company is down. So on the flip side of what I look for in terms of breakouts, what I'm looking for in these sort of situations is instances of the market overreacting and whether there's any good value in the company. Now, for NIB Holdings, I don't know. But you can see share price really doing nothing for a long time. We'd say almost 3 years. Let's have a look at the weekly chart, actually. So over the last 15 years, this is a nice looking chart, but a fair bit of volatility since about 2018. In fact, we'll say 2019, and it's understandable because that also includes the COVID-19 financial period. But if you do look at this particular weekly chart, this is the weakest this company has looked on this chart, apart from the COVID-19 period and just after that as well. So this is the weakest this company has looked. I actually do like this company. I've had a look at this company in the past, and I thought if I had to buy an insurance company, it would probably be NIB Holdings. So sort of glad I did not do that, buy any shares. But otherwise, what I'll do is I'll have a closer look at the results, have a closer look at the company's valuation. For instance, I'm seeing a PE ratio of 16.76. Have a look at the results. Maybe the PE ratio is now 14 or 13, and maybe the market is overreacting. Sometimes when the market is overreacting, you do have to be quick. So I'm mindful of that. But the other thing I should note, or we should note here, is before the company released the results, the share price or the chart was looking weak. There were signs of weakness there. Share price was actually in a downtrend. So this is another sign or another occasion where just listening to the market can be beneficial. That's NIB Holdings. Okay, this is, I'm not sure what the share price has done for this company, Genus Plus. I am a shareholder of this company. Share price up 3.51%. It's a beautiful looking chart. Share price did get to a high today, all-time high. And I saw the results and I went, this is exactly what I wanted. But I'm pretty sure the market thought or has been thinking exactly the same thing. The market had high expectations for this company. And I will not even say this company is good value. So I'll show you why. So this is one company I did have a look at results because I'm a shareholder. But when you look at the numbers, really beautiful growth in all their numbers. And again, how did these results compare to expectations? And also any sort of update. But we talked about growth really solid growth. For instance, profit up 43.7%, revenue up 24.1%, which means there was a little bit of margin expansion. They also talked about order books and strong tendered pipelines of $2 billion, basic earnings per share of 10.8 cents per share. So if you do have a look at the share price, $2.36, which means the P/E ratio of this company based off their financial year 24 numbers is above 20. So there is growth priced into this company. And fortunately, the company delivered on that growth in financial year 24. But I think the market expects more growth in the next few years. And I wouldn't say they won't deliver. This company has many tailwinds behind it, and those tailwinds could last maybe a few years at least, maybe even longer than that. Okay, but I'm a shareholder, so mind what I say, or put what I say into perspective, that I could be a little bit biased when it comes to this company. Smart Parking, pretty sure this company's share price has been a little bit volatile today. Yeah, it's been as low as 47 cents, open at 50 cents. So if it was down to 47 cents, the share price would have been down by over 10% at some point today. I did have a very quick look at these results, very quick. My first thought would be, revenue had increased a little bit, but if I remember correctly, the company did see a significant decrease in their profit, maybe EBITDA, that sort of thing. But that's as far as I went. Let's have a look. So revenue was up 21%. So I'm not sure, something's happened with margins, or maybe there was a write-off, or maybe there's a one-off, because profit fell from 6.4 million to 3.7 million, so down 42%. So when I see that, I want to understand why did revenue increase but profit fell. There could be a logical explanation behind it, and maybe why the share price sold off was because someone just saw the profit down and went, "Oh, I've got to sell." So there could be a logical reason behind that. And maybe today was a good day to buy some shares at 47 cents. Let's have a look at share price, or the chart for Smart Parking. And in fact, this chart looks really good. And this could have been a buy the dip situation for Smart Parking. Anyway, so let's move on to the next one. Tyro Payments. This is another one where I had a very quick look at their results, and I went, "Oh, these look interesting." So nice growth. Go to Tyro Payments. What was I going to say? So nice growth. And I would assume the market was a little bit surprised. So we're talking about what was interesting here. So profit quadrupled from 6 million to 25.7 million. EBITDA up 31.6%. Expanding margins, EBITDA margins, operating costs up a little bit, but this company is seeing some scale. Revenue up 8.2%. So when revenue is up 8.2%, but profit is up 400%, yes, company has expanded the margins. So the margins increased by 4.5 points, or basis points, from 21.9% to 26.4%. That's EBITDA margins. So just on the numbers here, on face value, the results look pretty good. But again, how does the market react? And sometimes the market reacts the complete opposite direction that I think it would go. But this was a case where the market went in the same direction that I would have gone, and share price up 13.8%. Is this a breakout? That's what we're looking at here, or looking for here. Is this a breakout? I'm almost there calling this a breakout. The last time share price was at $1.12 was back in March of last year. So almost a 6-month high. So talking about 5-month high. Some good volume coming in today. I am going to be following this company a little bit more closely now, based off this chart, based off the market reaction of these results. So there is potential that the market was being a little bit too pessimistic when it comes to Tyro Payments. Is it being a little bit too pessimistic when it comes to Close the Loop? Share price down 24%, 24.8%. Yesterday, well, actually not yesterday, on Friday, share price of this company rallied 10%. And I was like, ooh, I wonder if the market knows something. No, it didn't. This was just maybe a little bit of noise. I'm pretty sure it was about 10%. Let's have a look. 12.5%. So I was a little bit wrong with that. But the most important thing here, massive down day for Close the Loop. One of the most negative candlesticks you can see. Those solid red candlesticks are really bad. Also, the share price has fallen through a support level at 27 cents, which was lows we saw, or this company saw back in October 2023, got very close again in March of this year. So this is a negative looking chart for Close the Loop. Now, interesting enough, this is one instance when I looked at the results and I went, oh, these aren't that bad. Well, I didn't say that. I thought, oh, these are actually pretty good. Now, again, I probably should also say I don't follow this company much at all. I do know slightly what they do, but I don't follow this company much at all. And the reason why I thought, oh, these are pretty good results, is they achieved guidance. In fact, they mentioned it here. Guidance achieved, revenue of 219 million, EBITDA of 45 million, up 85% on previous corresponding period. Now, in saying that, this company is quite acquisitive, so they've made a few acquisitions, maybe even more than a few over the past few years. Strong cash generation, operating cash flow of 32 million, up 57%. They talk about debt management, reduction to or in customer concentration, which I also like. So when I started reading this, I went very quickly, by the way. I was like, oh, this is pretty good. And then I saw the share price down a fair bit. So obviously there's something in this the market doesn't like. In fact, the CEO, Joe Foster, says revenue and EBITDA have grown in line with their expectations. So these results were not worse than expected. Well, than the company expected. Maybe the market expected a little bit differently. So obviously there's something in this. It could be the outlook. I don't know. There's something in this, but a lot of words. I didn't go through this quickly because I was rushing. I would love to see a little bit of some word, not some numbers in it, but I don't see any numbers. Yeah. In fact, they said the outlook for financial year 25 is encouraging. So something has spooked the market. And this is one instance where I just want to know why. You could go to Capital Brief, but I didn't see it in this. You could Google it. By the way, Capital Brief, I just noticed this. They celebrated the 1-year anniversary last week. That's probably why I have not heard of it before. So let's have a look. What's it called? Close the Loop. Why is it down a lot? News. Let's have a look. In fact, Close the Loop revenue soars. Close the Loop reveals governance compliance. Close the Loop, oh, that's 2 days ago. There's nothing here. If you know why Close the Loop is down big, I'd love to hear that. Love to hear it. Yeah, nothing. I don't know. There's an interesting one. Now, sometimes you get that. And it could be an opportunity. Maybe the market is completely overreacting. I just don't know. I'd like to know why it's overreacting. Okay, Close the Loop. I've already talked about Actinogen and Cleaner Power. I've already talked about Premium as well. Kogan. Kogan has been under pressure. And today's share price is up nicely. Is this a breakout? It's looking like it could be. Now, the last time the share price got to $5 was back in May. So we're talking about 3.5 months ago. So we are at that 3-month high. I do prefer at least a 6-month high because there are many shareholders who bought at high levels. In fact, there are some shareholders who bought it at like above $8 not that long ago, this year. And they are underwater. They hate this company. They think this is the dog stock. So when they see the share price rise, they get excited and go, oh, I've got to sell my shares in Kogan. Share price is rallying and my loss won't be as big. Or maybe I could sell at a break even, that sort of thing. So there is a bit of resistance moving forward for Kogan. So a good day for Kogan. Nice volume coming in. Nice one-day candlestick. Did not have a look at the results. This is one company I did not have a look. I did see them mentioned here, I think. Kogan, okay, this explains it. It's just like Aussie Broadband dividends. All the company has to do, if they want to see the share price rally, just say, oh, we're going to increase our dividends or start a dividend. And Australian investors will just fall over themselves to buy shares in that company. So Kogan restores dividends after return to profit, shares jump. Yeah, that's all I need to read. They restore dividend. Again, Australians obsessed with dividends. And I think some companies do take advantage of that. CBA, perfect example. Profit fell. They increased the dividends, share price went on a rally. Insane, insanity. I think the dividend yield is like 3%, or maybe it's even less than 3%. Why would you be buying CBA with dividend yield of 3% when you can put that money to better use elsewhere? In a term deposit with CBA, much less risk as well on your capital. Okay. Don't want to really rant. What else? I was going to talk about TASME, but maybe I'll leave that to last if I make sure I don't forget. Just going to have a quick look at RUL, RPM Global. Share price has done nothing. We can move on. Let's have a look at Kelsian. Okay, this is a case where a company did. Actually, no, we'll talk about Kelsian now. So this is another instance where if you just look at the chart and you didn't consider Kelsian Group as a high quality company that you just had to have in your portfolio, the question I would say is, why were you holding shares in this company? Company released something negative in their February results. Share price then fell 12%. So you might be saying, well, that's pretty good value. Share price fell 12%. And this is a problem. When a company share price does drop a lot, it may not be the end of the drop. It can keep on dropping. And Kelsian is a perfect example of that. 2 bad results in a row, February and August. Share price in February dropped to $5.80. So you could be saying, oh, it's good value because just before the share price dropped, share price was actually above $7 for a period in January. So I'm getting this cheaper. But the problem with that is obviously the results were disappointing, missed expectations. Maybe the outlook was disappointing as well. And the share price moved into a downtrend and the share price kept on dropping. And then again, the company released something today. And it was not results. It was indicative results saying these are our results. On first look, I was like, okay, don't see anything untoward here. Again, I had a very close look. So revenue up 42.2%, underlying EBITDA up 63.9%, underlying EBIT up 44.5%. Now, some of the reasons why the share or these particular numbers are up a significant amount is because of acquisition. So I don't know if this company has made acquisitions. They might have. But earnings per share they have included. We've got earnings per share and before amortization expense. Calculated on underlying NPATA increased by 13.3% to 34 cents per share. Now, maybe what they have done there is justifiable. I don't know. I don't know this company enough. But if you do have a look at the underlying numbers, or not the underlying numbers, the numbers on face value, you might say, oh, these are pretty good. I did try to find their outlook or find something significant in their outlook. Now, they do mention capital expenditure of $137.5 million, and I have a feeling it might have something to do with that, based off Capital Brief, because they actually said that. What did they say? Kelsian Group shares dive on high financial year 25 capital expenditure guidance. So maybe the market is freaking out about that. Actually, in fact, in this article, they do mention they made an acquisition. So those numbers were boosted by 4-year gains from its acquisition of US bus company. I have no idea they did that. Okay, there you go. In fact, RBC Capital Markets analyst Owen Burrell said the result was largely in line. There you go. But noted the financial year 25 capital expenditure guidance of between 180 and 190 million was well ahead of consensus forecast of 97 million. That is interesting in itself, that the share price can drop by 23% because of higher than expected capital expenditure. That is intriguing to me. And I think maybe the market is overreacting. Anyway, $3.80. The last time the share price of this company was down to this level was way back in April or May 2020, as the share price was recovering out of the COVID-19 financial panic. Share price just after that went to a high of above $10. Yes, share price now $3.80, dropping from a high of $10. So that was an interesting one. Kelsian, unexpected, and 2 more companies. No, actually 3. No, What about Regal Partners? Now we'll move on. What I'll do is I'll just show you the chart for this one, but don't have to show you anything else other than the chart. Share price is in a nice uptrend after a long downtrend. So yeah, share price was up a little bit more. Don't like that sort of chart. I am trading this. I don't like that sort of one-day candlestick. So it has been a little bit of selling today for Regal Partners. Okay, two more companies to go: Endeavour Group and Tasme. So we'll start off with Endeavour Group. This was an interesting one and was not going to include this company. The share price was down and selling through the day. Share price actually opened up higher. Yeah, so the reason I was interested in this one, because it did look like Endeavour Group was trying to break out, and all they needed was a positive announcement, positive financial results, and they did not deliver, unfortunately, for shareholders. Share price down 6.87%. I have not had a look at the results in this company at all, so I can do that another time. But obviously the market, actually, in fact, let's have a look at Couple Reef, see if they've got it here. Endeavour Group, I'm pretty sure Endeavour Group shares lower on financial year profit dip. There you go. And NIB shares slump as earnings dividend misestimates. Yes, it's gonna do that. Adore Beauty didn't have a look at Adore Beauty. Maybe I should. Google shrinks Media Co deals by 40% as Labor weighs options on Meta. Okay. One company to go, and that is a company called Tasme. Tasme. I'm not sure if it's based out of Tasmania, and I'm not sure if it has anything to do with the sea. That'd be good. It's like a shipping company based out of Tasmania, Tasman Sea. That'd be awesome. I have no idea. I have not had a look at this company. It's a recent listing, but all I know, share price is up 7.3% on their financial results. This could get me interested in this company. So let's have a quick look at this company. Now, they did acquire a Future Engineering Group. So this probably more than likely is like a mining engineering services company, maybe. You could have a look at the presentation. So I'm going to open up the presentation right now, hoping the company does reveal what they do in this. Now, I did have a look at the numbers very quickly, and I was like, ooh, nice. Not only that, and the reason I say nice, so it does look like, based off this, they're some sort of services company, but infrastructure, engineering, maybe mining as well. Okay. Business overview, page 5. There we go. This is exactly what I wanted. Electrical, mechanical, civil, and water and fluid. Actually, I remember this now. So this is not one company. It was sort of like a combination of many companies coming together. And that's why it says Tasme owns and operates 22 independent, leading Australian diversified specialist trade skilled services, focusing on maintenance, shutdown, breakdown, and brownfield upgrade services. So I don't mind what this company does. I think there is value, particularly with the infrastructure, electrical, that sort of thing. I'm just not sure about this sort of bringing together all these 22 companies into or under the one umbrella, under one company that is Tasme. So obviously this company is not a Tasmanian-based shipping company. That would have been awesome. Would have been a good name. I'm not sure how they got Tasme, but that would have been good. Okay, so let's get to the results. And I'm going to show you why I liked it. I went, ooh. Not surprised the share price is up. So when a company lists or IPOs, they do forecasts of their finances in a prospectus. And when the company does release the first results after they have gone through the IPO, they will compare their results to the prospectus forecasts. Sometimes they miss, sometimes they do it better than expected in the prospectus. Okay, here we go. Highlights, and they've put this right at the top. Pro forma revenue, 407% or 407 million, increase of 10.8%, so nice growth. But here's the most important thing. Pro forma EBIT, 1.5% up on prospectus targets and 27.4% higher than financial year 23. Profit, 36.9 million, 10.3% higher than the prospectus target. So this is a profit upgrade. This is an instance of a company performing better than they expected. And that profit was up 29.9% on financial year 23. Pro forma earnings per share, 18.4 cents. That's all I looked at. They also go through statutory numbers, and those are pretty nice as well. Also a dividend. So dividend 6.5 cents. Okay, so 18.4 cents. Share price is $1.76. Did I say that right? Earnings per share 18.4 cents. Share price is $1.76. This company is currently trading on a PE less than 10. Before it's 16.37. I actually am surprised the share price is not up even more than this. I would assume one of the reasons why the share price has not rallied as much as I expected is because this is a recent IPO. This could be an interesting trade or even a buy, a longer term buy. What's the ticker code? It's TAA. It's actually an easy ticker code to remember because it's TEA. T. This one did pop up about a month ago. Share price did fall after the IPO'd, then rallied a little bit and then pulled back. So I'm not there just calling this a buy just now based off the chart, but the valuation is intriguing to me. So I will have to dig a little bit deeper into this card, but interesting. Now, it did list on the ASX back in April, so it hasn't been around for long. And this could be beneficial for us, ordinary, normal investors, because there's probably a few fund managers out there who won't buy this because it's only recently listed on the ASX. And that could be the reason why this company, just based off its numbers, looks cheap. But I'll have to delve a little bit more deeply into that. Okay, I am going to end this video here. I was going to, actually, no, let's talk about this. So Jaskin Factor says you're not supposed to be running on concrete. Well, actually, there is a little bit of truth to that. Fun fact, jogging or jugging fad was started by a doctor in the 70s who died of a heart attack at a young age. For regular exercise, do only, this, by the way, this is really interesting thoughts from this person. For regular exercise, do only what an 80-year-old can do, else you're damaging your body. Fun fact, do you know the first people to end up in a wheelchair as they age are the athletes? Not sure about that. It's all about the mileage. If you use it all up too soon, you get less, you got less for old age. I'm not sure that's how it works. It's simply mileage, and it just goes on and on. It also talk about why swimming is better. I actually could agree with that, but running is one of the best forms of exercise you can do. So let's have a look. Let's fact check this. Let's fact check these particular assertions from this dude. So, is running good for you? Well, running and early deaths. Running and I think that's what he was supplying. Running and early death. Let's have a look. Running participation is associated with a significantly lower risk of all-cause cardiovascular and cancer mortality compared with no running. Any amount of running, even just once a week, is better than no running. While BJSM, man, is this a peer-reviewed article? It is a peer-reviewed British Journal of Sports Medicine. This is a peer-reviewed article. Does running reduce mortality? Effects of running on chronic diseases and cardiovascular and all-cause mortality. Many studies, including ours, support that a small amount of running, even below the current minimum guidelines, can substantially reduce mortality risk and extend life. This is from the Mayo Clinic proceedings. If you want to trust anyone, the Mayo Clinic is one place you can trust, in my opinion. Very highly regarded. Running and mortality is actually worse. So I believe there's a lot of false information out there. You see false information out there everywhere. I've heard people say, well, you know, if you're running, your knees are going to go. You're going to have really horrible knees. A little bit of research shows that's not actually true. It's actually not true. Yeah. So here it is, an article from Mayo Clinic Proceedings. Running in wheelchairs. So this guy is probably saying that you're just going to destroy your knees if you do running in wheelchairs. Link. If you run, more likely to use wheelchair. If you run, more likely to use wheelchair or need wheelchair. To need wheelchair. If I don't find anything with this one, I'll just do the nothing. Just talking about sports wheelchairs and running wheelchair racing. Okay. Running and increase of knee damage or something. Here we go. Yeah. So this is not a peer-reviewed article, but runners often hear the warning: keep pounding the pavement, and you'll destroy your knees. I have heard that a lot. A new study found that runners were not more likely to develop hip or knee osteoarthritis the longer, faster, and more frequently they run. Yes, I have heard that from a few different sources. Can running too much damage your knees? Running itself is not bad for your knees. Yeah, so there's a lot of misinformation out there, not only on this, but a lot of misinformation out there. And I tend to be quite skeptical on everything. So I have actually, on Facebook, people have written some stupid stuff down. I've said, that's actually not true. For instance, someone said, oh, microwaves are really bad. They're dangerous. It's why Russia banned microwaves. And then I went, Russia banned microwaves? This is how easy it is to just check or fact check. Yeah, so they were banned for 11 years, 1976 to 1987. So that was almost 40 years ago. Yeah, so they're not banned. They're not banned in Russia. Someone probably remembers they were banned 40 years ago and thought, oh, they must be banned now. So, yeah, anyway. Another one was KFC had to change the name from Kentucky Fried Chicken to KFC because they no longer serve chicken. Simple fact check? No. Another one was illegal immigrants get more money from the government than pension. Simple fact check? No. In fact, that was a really interesting one because everyone was so furious. How dare they? Or blah, blah, blah. And simple Google fact check? No, wrong. I think it's very healthy to be skeptical of everything you read. But there are some things you probably shouldn't be skeptical, like flat Earth Society, you should be skeptical, but the world is round. That's not you shouldn't be skeptical about it. The world is round, that sort of thing. Don't be skeptical on that. But it is good to question. That's the way science works. Questioning, even if something has been proved, question. For instance, there was that doctor who said that vaccines cause autism. So other scientists went, what if that's right? Let's check it. And the biggest study in world history was done on that. So I'm pretty sure it might not be the biggest autism and vaccines biggest study. Pretty sure this was in Scandinavia. Yeah, 600,000 Danish children. I wonder if that was it. Oh, his name was Andrew Wakefield, 1998. Yeah, so a lot of research has been done on this, and there's been no link. So what they found was this Andrew Wakefield messed up his results or something, intentionally, I believe. Anyway, so always fact check silly things you do here, or things that might seem real, they might not be real. So anyway, Jaskin factor. I think some of your facts here are wrong. Some of your facts are right. Like swimming, I think could be better for some people. But saying you have so much mileage, so you can only walk or run 10,000 kilometers in your life, and after that you die, I think that's a little bit silly. Because otherwise, marathon runners would be dying every second. And I think even marathon runners live an okay life. Anyway, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.